Hello traders and welcome to another weekly Forex Market Forecast. In this video we're gonna see what happened last week in terms of the market and how that provided us with great opportunities in terms of the market. We are going to see each one of them one by one as we usually do. Starting with the dollar index. If you want to figure out what we have recommended to our members in terms of the next week, feel free to join us with the link in the description. And if you have any questions, you can email us at support@roiforecast.com as well. So let's start with the dollar index as we usually do. Last week we have seen a last push to the upside, then we have got this move to the downside with another push to the upside. So what the market has been doing last week is absorbing the market orders at this area of 106 and is getting ready for the next drop to the downside, which the first area it should be the 105 area over here as a first station for the dollar index, and this is also the highs from the 2nd of April before any reaction can take place. So what we can see either from here or with a small push up to the upside is to see the weakness arriving to the dollar index and reach the 105 area at least. For the euro dollar, we have been expecting last week to see a small push up and another low, which has been taking place over here. And from there, we have said that we have been expecting the market to start pushing to the upside. So next week we can see similarly a small pullback, very tiny over here. Then the market should give us another push to the upside. And later on, it's possible to get another move lower like this and then go up. So the market is getting ready overall for at least a corrective structure to the upside like this before anything else can take place. So for the euro dollar, we are clearly biased to the upside from the next week onwards. For the pound dollar, similarly to the euro, we expected last week to see a bounce and then a move to the downside, which has been taking place. And from here we can see a small bounce with another low. It is possible, however it doesn't need to happen. So what we're trying to say here is that we are creating a floor and then the market should start the move to the upside. First station should be around the 125.5 area. From here we can get a reaction with another push up later on. So overall we are biased to the upside for the pound dollar, similar to the euro dollar. Towards the next couple of weeks we should see at least a corrective bounce to the upside at minimum. Possibly from here the pullback can be also a little bit deeper. It really depends, but overall this should be the sequence and the structure in terms of the majors for the next few weeks from here onwards. For the dollar yen, we should expect next week sometime to see this drop to the downside before another bounce. So overall the market over here can get choppy. Possibly it could be something like this here, this structure over here, a drop and then another bounce to the upside. It doesn't need to be that big this time, but overall we are not looking for any buy setups in the dollar yen. We have been saying from here we can see another push to the upside before the reaction lower. The market has provided us with a bigger reaction because of the yen weakness. So overall next week we should expect this move to the downside first before another reaction to the upside. It is possible. Pound yen, we have been saying from here that the market should enter some sort of a sideways cycle, which exactly has been the case. So this is why we didn't like trading this pair. However, the market, the way it moves right now, it shows us an accumulation and weakness in terms of the bigger cycle. So we can expect some more consolidation over here. If we fail to break these highs over here, it means the market will be rolling over for a decent move to the downside. Which move can even extend towards these areas over here. It can break these lows as well. So overall, this market is getting ready for a big reaction to the downside. So we are not going to be looking for any buy setups at all. However, monitoring the price action here with a little bit more consolidation and failing to break these levels here, the 193 range, it means the market should be ready for the next move lower, which may start any time from the next week or even the new month ahead. So overall, that's the structure of the pound yen. So be mindful not to be looking for any buy setups at this stage and wait for the structure to show you the signs of the next move. For the EURUSD, we have been expecting from here to get a corrective bounce before the next move lower. The market has given us with a bigger bounce, right? So what we can see for the next week ahead is some consolidation over here and then a move to the downside still to take place, especially as far as we are below March the 5th, this peak over here, 167,400 area. The market can give us some signs of weakness and then turn to the downside. Something similar, let's say over here, it can take place, or something similar to over here can take place for the move to the downside. For gold, as we have been saying, after this pullback, we have still expected the market to move to the upside. We have been explaining for a long time from here that this is not the time to look for any counter trades in gold. The market is heavily supported. It still shows us signs that this market has more room to the upside. Of course, we don't know how much more in terms of the exact levels, but the way the market is moving right now and it closes, it seems like we are going to extend even higher from the following week onwards, perhaps into the month of May. So what we can see over here is still some consolidation and more pushes to the upside to take place. However, the cycle at some moment is going to be exhausted for a bigger pullback, but this is not yet the case. So regardless of the case, especially when we are above these levels over here, this area over here, gold should remain supported for at least more upside, perhaps possible to reach the 2500 area before we can see some sort of pullbacks like this can be possible, but for the time being the market is still supported and it has room to the upside. Now Bitcoin has reached the area of support, the 100% extension area over here, in which it has found buyers for a reaction. What we can expect for this market is some sort of consolidation to be taking place within the week. And eventually from the new month we should start seeing a reaction to the upside for new all-time highs again. So this should be the main focus in terms of the crypto market as well. Accumulation for another cycle to the upside should be taking place in crypto and in Bitcoin. For the SPX S&P 500 cash index, we are expecting to start seeing a reaction to the upside after this pullback. This pullback was to correct the cycle from 27th of October 2023. So from here we are expecting minimum a decent bounce to retest 5200 area, which is this gap over here. In terms of the cash index, and from here the market will later on decide whether it wants to pull back for new all-time highs, or alternatively it will decide if it wants to give us with another cycle to the downside to retest the lows or make marginal new lows before the next reaction to the upside can take place. So regardless of the case, before anything else takes place, the bounce to retest 5200, it is on the cards. Similarly with other indices as well, we should expect from next week to start seeing a reaction to the upside. Crude oil, we have seen the reaction from this extension area over here, which we have been explaining over the last few weeks. So from here the market needs to decide whether it's going to start a new cycle to the upside, right? Or is going to decide whether it wants to fail and make again another push to the downside. So perhaps something like this is also possible in oil before anything else takes place. Overall, as far as we are below these levels over here, another move to the downside, it is most probable to take place. For natural gas, we have been saying for a long time that the market is trapped within this downwards ending structure to the downside. So what we can expect after this bounce is to see the market failing. So ideally the market over here most probably is going to do something like this and start move to the downside once more to reach these extension areas over here before we can see another move to the upside later down the line. So this can take some time. The market is not ready for a cycle to the upside still, because it is within this ending structure to the downside before the next reaction higher can take place. So overall, as far as we are below the $2 range, natural gas is more likely to see new lows below February 16th, ideally towards 150 to 125 area over here, and then from here it will be a good opportunity for at least a reaction to the upside to take place. For the 3Qs, we have been expecting after this correction to see a bounce at least here before another reaction to the downside. Instead, the market didn't have the power to do so and it failed. So regardless of the case, it has ended the cycle from 26th of October, similar to the SPX cash. And then it is expected to give us a decent bounce next week before another reaction can take place. It is possible to retest this area over here, 440 or even 436 over here. So regardless of the case, a decent bounce will take place in the 3Qs before we can see another reaction to the downside, which is possible for either new lows or retest the lows before the next move higher can take place. And also to finish off with the GDX, the gold miners ETF, we have been explaining this one as well, which has been in an uptrend since 28th of February over here. So we have been expecting a pullback, a small one, and now the market should be giving us another push to the upside before a bigger pullback can take place. So the market over here can consolidate for the next push higher, which will support all the metals from the next week as well. So overall bullish still in the gold miners ETF and the metals from the next week ahead onwards. So that's it for this weekend's market forecast, guys. Thank you so much for watching. If you are new here, don't forget to leave us a like and subscribe. Turn on your notifications so you are informed when we publish a new video. We will see you in the next video sometimes within the middle of the week, and then for the next weekly market forecast. If you want to get daily updates and in-depth analysis like we provide to the members, feel free to join us with the link in the description, as well as check out our trusted recommended broker One Royal for your Forex, commodities, indices and ETFs trading. With that note, enjoy the rest of your weekend and we're going to see you in the next week.